Americans now owe more credit card debt than at any point in our nation's history. Think about that for just a moment. More than ever before. Not during the financial crisis, not during the recession, not during the pandemic. Today. That statistic isn't just about numbers. It's about people, families, homeowners, retirees, young couples, working professionals, small business owners, people who never imagined they would carry large credit card balances. For many of them, the debt didn't appear overnight. It didn't come from luxury vacations. It didn't come from expensive jewelry. It didn't come from buying boats or sports cars. It came from something much more ordinary: life. Let's imagine a homeowner named Susan. Susan owns a home in Nevada. She's responsible. She pays her bills. She has a steady job. She budgets carefully. She doesn't consider herself a big spender. Then life begins happening. Her homeowner's insurance increases by almost $1,000. Property taxes rise. Groceries cost more every month. Gas becomes more expensive. Her son needs braces. The family SUV needs a new transmission. The air conditioner stops cooling during July. None of those expenses were planned. None of them were unnecessary. They were simply part of life. So Susan does what millions of Americans do. She pulls out a credit card. Not because she wants to, because she feels she has to. She tells herself she'll pay it off next month. Then another unexpected expense appears. Before long, she's carrying a balance she never intended to have. Sound familiar? For many homeowners, that's exactly how financial pressure begins. Not with one terrible decision, but with dozens of perfectly understandable ones. Let's talk about how credit cards quietly become part of the monthly budget. Years ago, many people used credit cards for convenience. They charged groceries, filled the gas tank, bought airline tickets, then paid the balance in full each month. Today, that's becoming more difficult. Instead of paying the balance in full, many homeowners are making minimum payments. Not because they're irresponsible, because there's simply not enough money left at the end of the month. Let's think about what has changed over the last several years. Food costs more. Fuel costs more. Homeowners insurance costs more. Property taxes continue increasing. Utilities have become more expensive. Medical costs continue rising. Vehicle repairs cost significantly more than they once did. Even something as simple as replacing 4 tires can cost well over $1,000. Every one of those increases competes for the same paycheck. The paycheck may have increased a little, but for many families, expenses increased much faster. That's where the problem begins. The checking account runs short. The credit card fills the gap, month after month. Eventually, the gap becomes permanent. Now let's talk about something that surprises many homeowners: the minimum payment. At first glance, the minimum payment doesn't seem unreasonable. Maybe it's $200, maybe $300. But here's the problem. A large portion of that payment may go toward interest rather than reducing the balance. That means homeowners continue making payments month after month while the balance decreases very slowly. It's like trying to climb a hill that's getting steeper every step you take. The harder you work, the less progress you seem to make. That's one reason high-interest credit card debt can become so frustrating. Let's imagine another example. A homeowner carries $15,000 in credit card debt. Then the transmission fails, $5,000. The water heater fails, $2,000. A medical deductible arrives, $1,500. Now the balance approaches $25,000. The monthly payment increases. Interest charges increase. Financial flexibility disappears. Again, not because someone was irresponsible, because life happened. Let's talk about flexibility. Flexibility may be the most valuable financial asset homeowners have. Flexibility means being able to absorb life's surprises without creating a financial crisis. A healthy emergency fund creates flexibility. Low monthly debt creates flexibility. A realistic budget creates flexibility. Available savings create flexibility. Unfortunately, record credit card debt usually means flexibility is disappearing. And when flexibility disappears, stress increases. Many homeowners describe the emotional impact long before they describe the financial impact. They stop sleeping well. They worry every time the phone rings. They dread opening the mailbox. They avoid checking their credit card balance because they already know what they'll see. They begin arguing about money, not because they don't love each other, because financial stress affects every part of life. Let's talk about another misconception. Many people assume homeowners with substantial equity can't be experiencing financial pressure. That's simply not true. A homeowner can have hundreds of thousands of dollars in equity and still struggle every month paying bills. Equity and cash flow are not the same thing. One measures wealth, the other measures monthly financial flexibility. You can have one without the other. That's why understanding your complete financial picture matters. Income, monthly expenses, debt, savings, home equity, retirement accounts, insurance, everything works together. Looking at only one number rarely tells the whole story. Let's discuss warning signs. Using credit cards for groceries, making only minimum payments, using one card to pay another, skipping retirement contributions, using savings for routine monthly bills, postponing home maintenance, feeling anxious every time another unexpected expense appears. Those aren't signs of failure. They're signs that financial pressure is increasing. Recognizing those signs early often creates better opportunities. Waiting usually creates fewer. Let's also remember something important. Financial pressure doesn't discriminate. It affects people with excellent careers. It affects retirees, teachers, healthcare workers, small business owners, construction workers, sales professionals, families with children, couples without children, young homeowners, older homeowners. Everyone is dealing with higher costs. Some simply have more financial flexibility than others. One of the biggest mistakes homeowners make is believing they should wait until the situation becomes severe before asking questions. The opposite is almost always true. The earlier you understand your options, the more options you usually have. Waiting rarely improves financial flexibility. Information usually does. Let's imagine two different homeowners. The first notices credit card balance is growing. Instead of ignoring the problem, they review their finances. They understand their home equity. They create a realistic budget. They seek professional advice. They make adjustments while they still have choices. The second homeowner keeps hoping next month will somehow be different. The balances continue growing. Interest continues accumulating. Stress continues increasing. Eventually, decisions become much harder. The difference wasn't income. The difference was timing. Let's talk about pride. Many homeowners feel embarrassed discussing debt. Please don't. Debt is a financial issue, not a personal failure. Millions of Americans are facing similar challenges. The important thing isn't pretending everything is fine. The important thing is understanding where you stand. Knowledge creates confidence. Confidence leads to better decisions. Good decisions create better outcomes. That's true whether you're carrying $5,000 in credit card debt or $50,000. The numbers matter, but the willingness to take action matters even more. Before we finish, let's talk about the Nevada Strategic Property Group. Nevada Strategic Property Group is a collaborative team serving homeowners throughout northern Nevada, including Skip Benton, Tony Taylor, and Savannah Lee with Coldwell Banker Select Real Estate, along with Angie Salcido of Premier Credit Solutions. As a certified short sale expert and certified distressed property expert, our goal isn't to convince homeowners to sell their homes. Our goal is to help homeowners understand every available option before financial pressure becomes overwhelming. We believe education comes before decisions, information comes before fear, and planning early almost always creates better outcomes. If growing credit card balances, rising monthly expenses, or financial uncertainty have you wondering what comes next, don't wait. Start with information. Review your finances. Know your options. Then decisions become much easier when they're based on knowledge instead of fear.